Hi, this is Ferre with Tax Sale Support with a quick video about using the quick glance method to narrow your selection. Let's talk for a minute about what that means and what exactly we're talking about. First off, the quick glance method, narrowing your selection, is part of the research process that you're going to do, meaning that once you've obtained a list, the goal there is to try to narrow down that list to the properties that you may want to invest in. And depending on the size of the list, that may or may not be a big task. Some lists can be as large as having hundreds of liens or deeds, even more in some cases, and so you have to have some kind of a system for trying to narrow down your selection. Well, one of the systems that Steve and I came up with a while ago was called the quick glance method, and this is a way that we narrow down lists. And the idea behind it is really simple. I think it's something that we do almost naturally, and that is you need to set a criteria on the list using the information that is available and applying that criteria to try to narrow down your selection. So it can normally be done at a glance, and the purpose behind it is to help you distinguish between which properties you want to focus on and which ones you want to ignore. So you can utilize the quick glance method using one of these following categories, although it oftentimes depends on what is included on the tax sale list. Some lists provide a lot of information, while some lists provide very little. You can almost always find, though, a minimum bid amount or a base amount. Sometimes you can find an assessed value, or you may be able to see something like a property address, and each one of these categories can tell you a lot about the property. Again, it's really going to depend on the information that's provided on the list, but some of the parameters that you can set can be based on things like the price, the overall value, whether or not the property has improvements, or whether it's just raw land. You may do it based on the size or based on physical addresses. All of these are indications about what the property is, especially when you're looking at things beyond just the price. The price is oftentimes a reflection of what the property is, but you can specialize and look into certain types of properties by either looking for things like improvements, and maybe you're removing all of the improvements and focusing on the raw land, or the other way around. Now, setting a criteria based on the price is usually the first category that people use. It's also the most common one to use, and it makes sense that, why spend time looking at liens or deeds that are outside or cost more than what you intend to invest. It's also, though, a great way to weed out good investments from the bad. You can find that as you begin to dig into properties. As you dig into a property that is not one that's desirable, the things that you're not going to want about it will stand out. So based on the opening bid or lien amount, something else to consider is that when it comes to both tax liens and tax deeds, that opening amount is always going to be a reflection of property value. And that's because the amount that is owed is based on the property taxes, and property taxes are a combination of the assessed value of your property and what the property tax rate is for that year. So because all of the properties within the county are taxed by that same rate, the amount that's owed is also a reflection of the property value. So generally speaking, the higher the minimum bid or lien amount, the more valuable the property is. The only exception to this is in cases where there's something wrong with the property, like for instance if the property has an excessive amount of roll-up with it, meaning that there are many years of taxes that are owed on the property and it hasn't been foreclosed on. In that type of a case, you'll see a purchase amount that doesn't reflect what the property value is. It doesn't appear to be accurate compared to other properties, and that's one of the things that will begin to stand out to you if you're looking at properties just based on the price. Here's an example of using quick glance method with price and setting basically some different amounts. You can set some bracket amounts here so that you have an amount that goes above what you intend to spend, and then you're also going to look for a threshold that may be below the amount that you want to spend. In other words, maybe you look and find that most of the properties that have use and value tend to be valued above a certain amount. And you can use that as an amount that you're looking for properties, above that amount, and ignore everything below. But what you should end up with is a range there of a range that you can use to distinguish between the properties that you should dig into and look at versus the ones that you would ignore. So even just using a simple price bracketing system here, we're able to eliminate most everything on the list and focus on just those three tax liens in this case, because they're priced, we could say, between a range of $2,000 and $4,000. That's one example of how you might do it. This is another example of how we might do it using a physical address. In some cases here, the physical address can be an indication of improvements. We can also see there's a difference between complete addresses and incomplete addresses. And so we may oftentimes use the physical addresses or lack thereof to distinguish between different properties. The assessed value is another one you can use, and the assessed value is handy because you're actually seeing what the county is giving value to the property as. Plus, you can also combine that with the opening bid amount to come up with a bid to value ratio. And so these are all helpful factors when it comes to trying to determine what properties are. And here's an example of a list that provides a lot of information that we could use here. We've got the parcel number here initially, which we can always use to perform research. But beyond that, we've got the site address. We have an assessed value of the property. We also have a size of the property, approximate acreage, as well as a legal description, and then the amount that's owed, or the minimum bid. So each one of these categories could really tell us a lot about the property and can be really handy. And assessed value is always great to use, but you may be looking for raw land, and the approximate size of the property may be more important to you at the time. But either way, I think when it comes to lists, obviously the more information that's provided, the better. But you don't always have a choice in what that is, and so it's good to get good at being able to use the information provided to narrow down a list. If you'd like more information about tax sale investing, whether it be for tax liens or tax deeds, you're welcome to visit Tax Sale Support for more information, taxsalesupport.com, or you can also visit secretsoftaxlienvesting.com and download a free ebook.